Good morning, everybody. Thanks for joining us today as we prepare for the radio show with Dave. I just want to again remind you that we are offering our free report when it comes to retirement planning and just creating that strategy that's going to be useful for retirement. I mean, if you think about retirement, it's not something that we have the opportunity to do over. It's kind of a one and done thing. So it's very important that we have the right strategies in place. And so we've created a free report on retirement strategies. And whether you've already retired, because this still applies to you, or you're 5 to 10 years out from retirement, these strategies are very informative. And so we've put together this free report. All you have to do to get your copy is text the word retirement to 863-285-3815. That's right. Just text the word retirement to 863-285-3815. Dave's going to join us momentarily.
5.7 Light FM. That's Train. It's morning, Dave. It's 8:38. Time to check in on the trade war news. Not even your money, as so much as what's going on in the trade war these days. Downtown Sebring, we head to the offices of Statler Financial Services, where Phillip Statler is standing by. I started out before we went on the air, Phillip, and I said, boy, I bet neither one of us would have put a plug nickel on the markets ending up in the green yesterday, but they did, didn't they?
Yeah, they sure did, man. I would not have expected that based on where we started from yesterday. But evidently, and I didn't see this yesterday. I heard it on the news this morning while I was getting ready for work, that evidently there is a issue in China right now in their pork industry, and that they're going to have to import a lot of pork because their pork industry is having some issues.
Yeah, that's really interesting, and it couldn't happen at a worse time for China. I mean, Chinese cooking includes a lot of use of pork, and they have a swine fever outbreak there. Now, the backdrop for this, to put it in the Reader's Digest version, is the biggest fear in a trade war is that our Midwestern agricultural interests could really get whacked bad because there are alternative sources for agribusiness products that China has been importing, and the farmers up there are really, really nervous about this. If all of a sudden we've got them over a barrel, and it happens to be a pork barrel at the moment, that might just put kind of a different flavor on the trade war, because one of the targeted segments that China could really hurt, all of a sudden we've got some leverage we didn't have before.
Well, that's true, and you're right. That is something that they use a lot of, and there's a lot of them over there in China. So they consume a lot of pork, and so that's I don't know that that's what caused it to bump around and go the other direction, but I sure didn't see anything else out there in the marketplace to cause it to turn around.
Not really, because the only other news would have been a negative impact. The Trump administration is now issuing bans on specific segments in terms of doing business, period, with Chinese companies. The primary target is the big cell phone and electronics manufacturer Huawei. And the edict says that we cannot, without special permission, do business with companies that are adverse to our interests. And we sell a running ton of chips, like cell phone chips, to the company. So China's really peeved at that, and they're talking about other measures in retaliation. So it's not like the trade war has cooled off all of a sudden, has it?
No, it really hasn't. And from the headlines I saw, I guess there's about 70 other different companies that are associated with Huey that becomes an issue. And so that's definitely still on the radar, and that's something that China's not happy about, and that's one of their cards that they want taken off the table before they really start talking about trade, I think.
Yeah, you might remember a few months ago, maybe it was a year or so ago, we had some sanctions against another Chinese tech company that dang near put the company out of business, and Trump relented and lifted the ban on doing business with that company. So, yeah, we could make a substantial impact on Chinese unemployment by whacking that particular segment of the market too terribly hard, because a whole lot of our electronic junk comes over from China. But it needs to be remembered that China buys a lot of our parts in order to make that happen. So it's kind of adding an interesting twist onto this.
It is. Hey, we got some other macro news too. We got housing starts came out today, climbed 5.7%. which was better than expected. They expected housing starts to be at an annual rate of 1.21 million. They came in at 1.24 million. That doesn't sound like a big difference, but hey, that's a big deal when it comes to housing starts. And then we had new jobs, initial jobless claims dropped unexpectedly to 212,000. That's about 16,000 less than what was expected.
Both of those being indicators that our economy is doing okay, albeit in the jitters right now over trade issues. Yeah, the housing starts, you talk about, an extra 4,000 homes doesn't sound like a whole heck of a lot, but ask the construction workers. That's a run and ton of jobs that we keep going with an unexpectedly good start on housing, right?
Yeah, it is. Hey, I want to go back to yesterday too, because there's some numbers that didn't come out until after you and I spoke. Two numbers in particular: the industrial production rate.
Mm-hmm.
Um, they were expecting an increase of 0.1%. It actually went backwards a half a
Oops.
percent. So that wasn't so good news yesterday. And then the retail sales. We talked about retail sales. We didn't talk about retail sales, not including auto. And and they were expected to come in at 0.7. They came in at 0.1. So about a 0.6 of a point difference there than what was expected.
Yeah, I didn't make note of it at the time yesterday because the figures, I think, plus and minus autos were about the same. So consequently, the overall number was the one we spent some money on and time on at the time. But yeah, indications again, mixed signals out of the economy, not growing as fast as it was a year or so ago, but at the very least, we aren't dead in the water by any measure. Speaking of not dead in the water, we got a couple of big names that reported their quarterly earnings overnight, and I saw Walmart, one of them, right?
They did, yes, sir. Walmart's probably one of the biggest companies that reported. So they came in pretty good. They beat by 11 cents a share. Revenue though was a little bit below estimates. Now, it doesn't mean they didn't sell as much, but they're a worldwide company, and so they said it was largely due to some currency related items when they had to make those exchange rates in there. And
Ah,
then their same store sales um, came in a little bit ahead of expectations, beat by about 0.1%. So some good things at Walmart in terms of numbers. They're trading up today a little over 3.5%.
I think anybody looking for a parking space at one of our local Walmarts would say, yeah, same store sales up. Big surprise, right?
Yeah, exactly. It's always hard to get in there.
Absolutely. Other indications.
So we got Cisco Systems, the big computer networking company. They came in 2 cents above estimates. Their revenue also was ahead of what was forecasted. And then, of course, they kind of hit the grand slam, better than expected guidance for the current quarter. They're trading up almost 3.5% this morning.
That explains why they're toward the top of my winner list this morning, doesn't it?
Yeah, it does. I got two more for you. I've got Flowers Foods, the bakery that makes the buns and bread, and they came in by 2 cents above estimates. Revenue beat forecast. They've been able to raise their prices to help overcome some of their slowing sales. I'm sure with this keto diet phase, it's not helping the bakeries like Flowers who produce bread, but they're trading up less than 0.2% this morning.
I hadn't thought about that, but you're right. All the fad diets right now tend to shy away from bread. That is a challenge to a wholesale bakery, isn't it?
It really is. And the last one I have for you today is back to the retail space, Dillard's. Uh,
Ooh.
yep, Dillard's had a good quarter. They came in 19 cents ahead of estimates at $2.99 a share for earnings per share. Now, their revenue was basically in line with the forecast. They missed on same store sales, and in other words, not really that they were lower, but they were flat compared to expectations. So they kind of just came in at expectations, and they're trading down just a tad. Actually, you know what? There hasn't been a trade yet this morning. They closed down yesterday 1%, and there has not been a trade this morning to indicate which way it's going to go.
Kind of interesting. We generally the first quarter is a really bad quarter for retail. Both Macy's and Dillard's coming out with at the very least acceptable reports, and Macy's a pleasant surprise. That's really kind of a good sign in the first quarter, isn't it?
I think so. That they've been able to make that happen. And I didn't see the detailed report. I mean, we know from Macy's standpoint, they did it by increasing and benefiting from some online presence. And so I have to assume that these other retail stores are starting to get that same momentum going and trying to get their retail operations online and functioning so that they can lure people online if they don't come into the store.
Understood. So, setting the table for this morning, we alluded to it was a surprise yesterday. All three indexes up, and that was unexpected. The Dow was up 116 points, NASDAQ up by a little over 87, which is a nice recovery. That's well over 1%. And the Standard & Poor's got up by about 16.5, which is over 0.5%. Like I said, unexpected. Can we keep that momentum moving 45 minutes before trading starts this morning, Phillip?
So right now it looks like we can, Dave. It has oscillated higher and lower than what the number is right now, but we're still in the green and significantly in the green. The Dow's up 93 points, which is a little over 1/3%. Same with the S&P 500, about 1/3%, up $10. The Nasdaq's up 0.2%, $14. Gold and silver both trending down. Crude oil trending back up significantly, up about 1.5% to $62.92. And let me mention before I let you take it back is 10-year Treasury
Yeah.
has it is bouncing back off of lows, but lows yesterday it got down in the 2.3638 level. We're back up
Uh-oh.
to 2.4 right now. But I just want people to realize that that's still some indication that people are seeking some form of safety in this volatile market.
Yeah, they're definitely taking money and going someplace where they know they're going to get a low return, but at least an assured one, right?
Exactly. And so that's just got me kind of watching that number because it has drifted significantly lower from where it was, last year when we got up to 3.2%. And that to me is an indication of people moving towards more safety.
Absolutely. It's off 2 basis points from the close last night this morning, too. So the trend looks like it's continuing, even with the green ink on the equities. Overseas markets, Asia was mixed. Japan was up, but the mainland China markets actually, or Japan was off, rather. Mainland Chinese markets, surprisingly, were up this morning. Europe is up so far midway through their trading day. Phillip, need stability, need advice, and don't let 3 green days in a row get away the concern. How do I find you on the phone to stabilize my retirement fund?
Dave, give us a call at 382-0037. Great time to schedule your no-cost obligation x-ray report to determine how much risk you have in your portfolio. Then follow us on Facebook at Statler Financial Services, like our page there, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here again tomorrow morning, same time, correct?
That's right. Absolutely, man. For the end of the week.
Thank you so much. We'll catch you tomorrow. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, I want to thank you for joining us today. And just remind you one more time as we close out for the day that we do have our free report on retirement strategies. A great, retirement is something we need to plan for. You need to know what your strategies are going into retirement. That's why our income plan is so important to get to put together before retirement. Hey, to get your free report, just text the word retirement to 863-285-3815. That's right. Just text the word retirement to 863-285-3815. Hey, thanks for joining us today. I look forward to speaking with you tomorrow. Bye now.